Okay, we're going to get started. Hi, everybody. Welcome to our webinar about ADU financing. I am Anna Alexeeva. I'm the director of the ADU Resource Center of San Mateo County. I'm going to talk about who we are as an organization in a second, and I'll also introduce our panelists today. I'm very thankful that we have a really great, diverse panel of experts who are going to talk about everything from financing to insurance to investment strategy today. I see that a few folks on the housekeeping side have their hands raised. So in terms of the run of show and what we're going to do today, we're going to have a few short presentations, and then we're going to have a Q&A. If you have a question, feel free to enter it into the chat. I will be monitoring the Q&A as we go throughout the webinar. The panelists will also be monitoring it, so we will do our best to get all of your questions answered. This webinar is being recorded, so don't feel like you have to take notes. You will have the recording afterwards, and we'll also share the slides afterwards. And with that, I want to introduce the panelists that are joining today. I will let everyone introduce themselves when they do present, but I do want to share. So we have, like I said, a diverse, really deep bench of expertise today. I'm really thankful. We have individuals from the financial sector, credit unions, banking, mortgage brokerage, insurance, and accounting and investment strategy. And so we're going to try to pack a lot of information into this session. The goal of today's session is to have you leaving with as much information about understanding what your financial options are and considerations that you should be taking back for your ADU project. And so, because we are typically talking to homeowners who are at the early stages of their ADU project, I did want to do a quick poll to see where everyone is on the line in terms of what you're thinking about with your ADU. Are you just exploring the concept of ADU? Have you already started looking at plans? We want to know where you are because that'll help us tailor our presentations and our discussion to your needs. So I'm going to launch a poll, and if you can provide answers, please do. I'll keep this up for just a couple of seconds. So it looks like we have a fairly good balance of people who haven't yet started, which makes sense, probably why you're exploring financing options at the moment, and people who are a little bit further along in the process. Looks like they've made the decision to build and are looking for their professional team. Okay, thank you very much for that engagement. Okay, before we get into the meat of today's presentation, I just wanted to provide a quick overview of the ADU Resource Center, which is the host of today's webinar. We are a nonprofit. We work across San Mateo County with homeowners and with jurisdictions, and our goal is really to be a non-biased source of information for homeowners and for jurisdictions to help get ADUs built. We are not selling any product or services. All of the experts that we've assembled on today's panel are here for educational purposes, and our goal is to help homeowners make the right decision for them, whether that's building an ADU or whether that's deciding that maybe an ADU is not the right choice for you. We want consumers to go into this very big project armed with all of the information that they need to set themselves up for success. We have lots of free resources assembled on our website, smcadu.org. So for those of you who are still in the beginning stages of exploring an ADU project, I do encourage you to go onto the website and look at the different resources we have assembled there, including process guides and a detailed ADU guidebook. I also want to call out, if you are a resident of San Mateo County, that we do free feasibility consults for residents in most jurisdictions. That entails speaking with an ADU specialist who will do some research on your property, talk you through your options and potential next steps. Again, these are provided absolutely free. If you'd like to find out more information about that, you can go to our website. Again, it's smcadu.org. And the reason we really exist, our organization has been around for about 2 years, is because ADUs are such a popular housing type. And we've seen in the past 10 years incredible growth in ADUs. Uh, a lot of this is driven by the fact that the state of California has made it significantly easier year over year to build ADUs. And a lot of it is just driven by consumer demand because there are a lot of different opportunities that people see in the idea of adding this particular unit to their property. In San Mateo County, specifically where we work, folks are surprised to learn that almost half of the new units that were permitted in 2024 were ADUs. So not only are these a really big area of construction and residential construction, they're also a substantial contributor to new housing units across the state and particularly around the peninsula. Why are ADUs so popular? As I mentioned, a lot of the boom that we've seen in the past decade or so in California has had to do with changing state legislation. But from the consumer and the homeowner standpoint, we see a lot of different reasons that people come to ADUs. We see a lot of homeowners, and we also know from the data that folks are interested in ADUs because they offer an opportunity for multi-generational living. So that might be a family that is building an ADU for aging parents. It might be building an ADU for adult children who frankly cannot find other affordable housing choices in the area. We know an equal number of people are interested in ADUs as a source of rental income. They build them to rent them out. And of course, that is an income stream for the homeowner. But on the other side of the coin, that also provides housing for the community. We get a lot of interest from older folks, from senior citizens and individuals nearing retirement. And ADUs are particularly appealing to them because they offer the opportunity to downsize without having to sell your property, without having to leave your neighborhood or community. And lastly, of course, they're a big investment in your property, and we see from the data that they increase property value over time. So they are a big project, but they do pay dividends in terms of the appreciation in property value that homeowners see. I'm not going to talk too much about the different types of ADUs today or the ADU process. I will just say that if you haven't already explored the resources that we have available, you can find them, like I said, on our website. For the purposes of today's conversation, I just want to point out that there are, as you may already know, a number of different types of ADUs. The quintessential ADU that people think of when they think about ADU is a standalone backyard cottage, but there are lots of other types of ADUs that you may already be considering. There are conversions of interior space, there are conversions of garages, there are attachments. For the purposes of today, and when we're talking about financing and insurance, the type of ADU you're building may affect the financing choices or the financing options that are available to you. So we'll talk about that a little bit later. And we know, of course, that time is money. Anyone who has engaged in a construction project will be very keenly aware of this. It's good to keep in mind, especially if you're first starting out and trying to understand what an ADU project will entail, that you have to anchor to a realistic timeline. A lot of people, when they think about building an ADU, will think about the construction timeline, and that can last anywhere from 6 months to a year. It could be quicker if you're working with a really efficient contractor. But there are also a number of steps that precede the construction process that can add time to your project. You have to make plans, you have to get the designs in place, and you have to get the permits in place before you start building. In general, we tell homeowners to budget somewhere between 9 to 18 months on average for an ADU project. But as with everything I talk about, and as with everything with ADUs, so much depends on the project, so much depends on your circumstances and the characteristics of your lot. So working with a professional team, reaching out to resources like the ADU Resource Center and other professionals is really going to be valuable for you so you understand what your opportunities and your constraints might be. The last thing I want to talk about as part of my intro before I pass it off to our experts here is budgeting. When we talk to homeowners about budget, we do sometimes get some sticker shock. We are anchoring homeowners right now to a typical cost of about $450 to $600 a square foot. This is pricing that we're seeing in San Mateo County. Now, like I said before, there are a lot of characteristics that may affect the budget. Of course, you can make choices uh, bring in the costs if you are working on a tight budget. But there are some factors that are going to be outside of your control. Whether you're on a hillside, what the soil conditions are in your property, whether there are certain fire regulations that need to be met, certain utility upgrades can add cost to the budget. All of these things you will discover as you embark on your project. But again, it's things that you should be keeping in mind and asking your professional team about so you are anchoring to a realistic budget and you're not hit with surprises and additional costs throughout the process. As you can see here on the right-hand side, typically the cost per square foot will, of course, go down as the size of an ADU goes up. You get some efficiencies of scale if you're building larger, and conversions do tend to be less expensive than ground up new construction ADUs. The caveat here is it really depends on the space that you're converting. If you are thinking about a conversion ADU, we do talk to homeowners who are looking at garage conversions where the quality of the garage, the foundation, the age of the garage means that it makes more sense to demolish and start over. So these are the sorts of things that you're going to discover as you embark on the pre-construction phase and the planning phase. But these are some numbers that you can anchor to as you're getting started. The other thing that I like to talk to people about is fees. Now, fees are going to be a minority or a small proportion of your overall budget, but as you're interacting with your local city, your town, you're going to see fees that may start adding up. So it's good to be aware of what may come down the pike. It's good to talk to your planning and building department to understand what fees will be assessed in your jurisdiction on your ADU. And it's also good to keep in mind that certain fees only kick in at certain ADU sizes. So development impact fees, for example, which are fees that support infrastructure development in a jurisdiction, are only assessed if your ADU is 750 square feet or above. And similarly, school fees are only assessed if your ADU is at least 500 square feet. These are the sorts of cost considerations that may end up affecting the design choices you make, so it's good to be aware of these up front. And lastly, I just want to make a plug for a tool that we have available on our website. It's a free tool called the ADU Calculator. You can put in some characteristics of your ADU, what your lot looks like, what you're looking or thinking about building, and get a general sense of potential costs, monthly expenses, and what that translates into in terms of return on investment. Again, these are numbers that need to be refined as you start talking to professionals and getting an understanding of your project, but good to give you a general sense of whether an ADU that you're envisioning will make sense within your budget. And so with that, I'm going to pass the mic to a few different folks. Today we have Anna Lopez, LJ Grossweiler, and David Butler, who are going to talk about the different financing options available on the market. I'm going to let them introduce themselves, but needless to say, they have worked collectively with hundreds, probably thousands, I'm not sure, of homeowners around ADU financing and mortgages. And so they have a wealth of experience and expertise that they're going to be sharing with you today. So Anna, take it away.
Thank you, Anna. Hi, everyone. Thanks for joining us on this beautiful Saturday. So I'm sure you're wondering, I'm ready to build an ADU and looking at finance, right? Where do we begin? And really, where do we begin is through finance to different variety of finance. And it's easy to talk about loans, but I wanted to give you all a little bit of different areas that you can look for finance and just talking about a high level alternative ADU financing. So we're going to go through these scenarios. Just quickly, but I wanted to give you the difference. So you have margin loans, you have retirements, you have personal loans, you have cash out refinance, builder or contractors financing, which is construction, and then family or partner funding. So different options is going to be best for certain set of people as well as what's the risk. So most everyone pulls in their HELOC, which is known as home equity line of credit, or HE loans, which is home equity line um, equity loan, I should say. And then, of course, there's ADU loans. They're really best for flexible draws on a HELOC, and the risk level is medium. ADU loans are more structured, build lower risk because you know what the monthly payment is going to be like. And margin loans are great for investors who are investment savvies. They're higher risk, and we'll talk a little bit about that. 401k, I'm sure we all have it. How do we use it? We're going to talk through that. It's really best for liquidity, and if your job is stable and you have a pretty good nest egg that you can utilize, risk is medium on that. And of course, personal loans for small gaps. And the gaps are really made for maybe those fees that Anna had talked about at the beginning from the start of your ADU journey. And the risk level is medium to high, depending on what type of personal loan you're getting. Overall, we really suggest that you always consult with a financial or state tax advisor, so that way you can really understand the different uses and not have a tax impact. And your advisors will be able to consult you to a better and always get a different type of opinions and perspective so you can make the best decision. We'll go to the next slide. So let's talk a little bit about margin loans. What is that all about? For those who are really they have great stocks, and they've had stocks for many years. What you can utilize for the margin loans is homeowners that has investment, but you don't want to sell your stocks. You're going to trigger capital gains and so on. Well, this really helps you to borrow against your stock, and you can utilize it for any of your projects. It doesn't need to be just for ADU, but many other factor. Margin loans offer quick access to funds and really less paperwork. You don't really need to qualify because you're borrowing against your stock. Your financial advisor will be the best person to go through this. Most brokerage house, you just want to go ahead and give them a call and ask them, do you do margin loans? Most of the time, credit is not checked. You don't go through a lengthy process with loans, application or anything. And most of the time, you'll be able to get your money within 7 business days or less. So the big risk is if the market is a downturn, it can trigger a margin, excuse me, and they'll have to call your stock back. So that's what you want to take a look at, is ensuring that your stock level, and this is why you need to talk to your financial officer, so that way it doesn't trigger a call. It's really best for someone that is savvy with investment or received a lot of information before they move forward. So margin loans are fast and easy, but the risk is still medium on that. We'll go to the next slide. Using retirement accounts. So as Anna had mentioned, many times the people that are looking at ADUs are someone that's retired. They don't want to move out of their house, and they love their neighborhood and they don't want to sell it. So they want to live in it, but maybe rent out their big house or the ADU unit. And you can utilize your 401k. And by doing that, you're really borrowing against your 401k. Again, it requires very little paperwork, if any. For 401k, you should be still employed to be able to borrow against it. and the repayment is what you structured. However, it can trigger tax consequences if your employment ends. So do remember stability of your employment. Um, and for those who want to borrow against your IRA account or withdraw, please talk to your financial advisor again. They will let you know in regards to if there is any type of consequences for early penalties. And that way you can understand based on your age requirement. Um, and overall, always talk to your advisors on that. And we'll go to the next one. So personal loans as a financial tool. Many of your lenders will give you unsecured loan benefits for personal loans. How much can this be? It really depends on the lender. It can be as little as 30,000 and as high as 100,000. Now, it is a loan process. This can take up to 30 days on some lending institutions. However, it's based on your credit score and your income. So make sure that you have an understanding what your credit score is. Interest rate is going to be on a high. It's based on index and a lot of margins. So talk to your banker or your lending financial officers in the bank. They can walk you through the step. Now, is it fast and simple? It depends on the lending institution. I've seen it closing in a matter of 5 days, and then or it could take 15 days if they need additional documents, but normally it's the fastest way. Usually it's about an average of 2 weeks or 10 days. The trade-off is higher interest rate, of course, we talked, but a shorter repayment plan. And compared to home equity, the trade-off is you're paying more, but you're paying down your principal, where a home line of credit of a HELOC, you're paying only on interest. And overall, this is a bridge loan. This is just to get you to the start. This probably won't fund the full entire project for you, but this is for someone that has a great savings plan, but they just need a little bit of money to start their process. Next one, please. So cash out refi, why would you do this? Well, you would do this if you have no mortgage on your current property. And I say this because usually a refinance against a HELOC or a HE loan is technically a lower interest rate. So you want to start this process by giving your lender a call. Usually it's a bank that you bank with or with your mortgage, and ask them, do they have a cash out refi? And most of them will. But you're going to look and compare for rates. Rates are going to be dependent on banking. And the strategy here is asking for what type of terms you want, from adjustable to long terms, 15 or 30-year fix. And it can take anywhere from 30 days to 45 days to complete. The advantages of a cash refinance offers blended rate, but also consolidate all of your fixed payment, and if you have other loans. So you can utilize this for additional needed besides an ADU. If you feel like you have higher interest rate credit cards or so on, or auto loans, you can pull it all together and pull out the cash. Now, do I recommend this for somebody that has a current maybe 3 or 4% interest rate? Maybe not. However, if you have $1 million with a 3 or 4% interest rate, definitely don't do a cash out. That rate is amazing. It's going to be quite some time, or we're going to ever get that rate. I don't know. We are. But if you have maybe $100,000 left on that existing mortgage and you need about $400,000 out, I would look at the two options, either a cash out refinance or some type of home equity loan, and see what the best blend of the payment and the rate for you is. Next one, please. And builder and contractor financing. So some of your builders will have some type of funding for you, or construction companies might have some funding for you. Now, I have to caution that they might not be able to fund directly from them. They're going to use some type of lender to help you with this. So if you're talking to any of the lender, make sure that you're getting all your information, meaning how much the cost is, when do you have to pay back the loan, and the duration of when the money's going to fund to you. In regards to contracting, financing, construction, funds are only given to the construction company once a set of project is done. Money is not given to you directly to control, but it'd be the lending institution that will say what time frame that that construction company finish. They'll give a set of funds, and then they'll watch as your ADU is being built, and they'll fund it to the timeline that the contractor or construction company have it. Now, with construction loans, you have to understand it's higher fees. You will still go through a whole process of loan documents and so on. So if you have questions on that, talk to your contractors or builder, and they'll let you know who they have. Very important when you're building an ADU, please do not start on your construction at all until you talk to financing. Once you're in construction, most of your financing options, like a HELOC or a cash out, is halted. They cannot do any type of loans while you're in construction. All right, Anna, next slide. So family or partner funding. So of course, I'm sure you're saying my brother, my sister, my daughter, my son, niece and nephews are going to live, and they are going to go ahead and help me pay with this. So of course, this is going to be medium to high, because I don't know how many of you ever received a loan or borrow money, but if anyone as family borrow money, sometimes it doesn't get paid back. So very important is that you have amazing communications with your family, maybe have a promissory notes and go through the process and how much they're funding, and overall, for the ADU or funding of this project, when it's paid back, who owns what. So instead of reading the slides, I just want to make sure with family or partner, clear statements and communications is key to ensuring that not only you're getting paid back, but also you're still talking to your family after the process. And then they're living quarters right next to you. So just be sure to have a great communication on that one. So with all that, going into what I do. So let me reintroduce myself. My name is Anna Trong Lopez. I am with Mary West Credit Union, and I am a business development officer. I do all banking solutions, and Mary West has been around. We're celebrating 65 years this year. We're an IBM-based company and went public to everybody, especially in all the 5 counties of the Bay Area, to help you. So Mary West is one of the very few lenders that offer ADU home equity financing. I'll talk about the different type of equity loans, but this is what a home fast ADU loan is. Really, it's a fixed rate, and meaning for 25 years, it's fixed. You're paying principal and interest on 24 years. But the very first year, because you're just starting to build your ADU, we have an introduction offer of 5.99% APR that you're paying interest only on for the next 12 months. After that, it's fixed for 24 years at 7%. This really gives you some comfort so that you know what the monthly payments are. And I gave you an example of below what it would be like for your property. Now, unique thing about Mary West Credit Unions, we have loans for primary and investment property. We'll go to the next slide. And don't forget, all these slides are available to you so you can reread it again. But for equity loans, here are some examples. So a home equity line of credit is a HELOC. The rate is variable. It's going to adjust based on the Wall Street Journal Prime. It's not a fixed rate. The index will change up or down, and it's going to be triggered by the Fed's announcement. So currently, the prime rate today is 6.75. When you're ready to get an equity loan, margin is what you're looking at, because a margin is what stays the same for the life of the loan. So it's really important to ask them, what is my margin and what is being fixed, right? And then lastly, for a HE loan, this is an actual loan. An HELOC, you have draws. You have a 10-year draw. Think of it as a revolving credit line of your house. Whatever you pay, you can pull back the full amount and use it again. Where a home equity loan it's a set loan. So if you need 300,000, here's 300,000, you're going to start to pay it again. Where a HELOC, where you're just paying an amount that you pull out at the time to utilize. And I'm sure some of our lenders on here is going to talk more about that. But also on a HE loan, you have time frames of fixed. You're paying principal and interest. Usually the terms are 10, 15, or 20 years, and there's no draw period. Next, please.
And I'm just going to do a time check that we're running a little behind.
Okay, we're almost done. So again, this is a slide on primary residence, so you can see what the time frames, what the interest rate are and what the payments could be. And on the next page is where investment property, it's not a huge difference. The margins is higher by 0.5, but you'll be able to see the breakdown. And lastly, I'm here to help. So if you need anything, please give us a call, and we're here to help you with your journey. Thanks so much.
Thank you, Anna. LJ.
Hi. Hi, everybody. Happy Saturday. Thank you so much for joining us today. And I am LJ Grossweiler from Key Point Credit Union. Key Point is a local credit union here at the Bay Area. We've been around for 47 years. Key Point has about $2 billion in asset and serve 52 members here in the Bay Area. And I'm here to talk about our ADU product for financing your ADU project. We touched about ADU, right? Everybody already explained the ADU, and I wanted to just talk about how Key Point is different in your ADU in ADU financing, right? So for us, we use your future rental income to qualify. So a lot of retired folks are having problems or issues getting approved, but with Key Point, we can determine the rental income for that ADU, and we can use 75% of that. Lower payments during construction, we do offer the HELOC. HELOC is that line of credit, and it's interest only for 3 years. So that's give you a lot of flexibility on the monthly payment. We also are able to give you financing before you have permits, because I know sometimes the permits are costly and you need money for that. So Key Point Finance will offer financing even before you have the permits. Future value, Key Point will offer 90% of the future value of the house for your financing. And then we also have milestone-based disbursement. What does that mean? You don't pay the money all at once. So if you have a 500,000 loan, we disperse that in different stages of your construction, so that for this month, you would only pay what you borrow. Our team will guide you from start to finish. I have a very reliable team of loan officers that will help you and guide you through your financing journey. Next slide, please. I'm just going to go a little deeper on our products so you have a better understanding on how we can help you and if we are a good partner for your ADU construction. So we do have 2 ADU products, the HELOC. That's a home equity line of credit. That's the one with the variable payment. It is a 3-year draw period, and it's a 17-year prepayment period. How does that work? So the first 3 years, we're thinking that will be your construction period. Interest only. Now, if you have extra funds, you're more than welcome to pay to principal as well, but we only require you to do interest only. From year 4 to year 17, it will be a fully amortizing payment. Now, the home equity or the HE loan is what we call it. It is a fixed rate. So we offer 7, 10, 15, or 20-year term. It is a fixed rate. So whatever is the rate that you have at the beginning, that will be the rate for the whole life of the loan. But ours is a little different. We do not give the whole money at funding. We don't give it a lump sum. So if it's a 500,000 loan, you do not get that on funding day. We also do a milestone disbursement on that. So for a given month, the payment is calculated based on how much you borrow. We talked about the future value. 90%, we will use 90% of the future value. So how does that work? So when we start the process, we're going to send an appraiser to your house. The appraiser will give us two values. They're going to give us the value of your current house today, and they will project the future value with the additional square footage of the ADU. So we can go up to 90% of that future value. We can do 500,000 max loan amount. So this loan amount is calculated based on the amount of the construction of your ADU. So we will base it on the quote from your contractor, from your builder, how much that ADU is going to cost you to build. We can also add permit fees, utilities, solar, anything tied to the build of the ADU. We can use that to get to that 500,000. Now, we will not give you extra. We will not give you cushion. So whatever is the estimated cost of your ADU, that's how much we're gonna let you borrow. We would love to be in second position. First position is okay if you don't have a current first mortgage, but if you currently have a second position, like currently have a HELOC, we can definitely include that to pay off with your max loan amount, but we would have to pay off whoever is in your second position. Appraisal requirement, we do full appraisal and you pay that directly to the appraisal management companies. We do collect for fees. So we talked about, Anna talked about how much it's going to cost you. When we do a loan, there's also fees. There's lender fees, credit report fees, and also title fees for these loans that we do. You need to be, when you talk to us, you need to have already a contractor because we're going to ask you how much you need to borrow. So you need to have that number. So we will also vet your contractor. So we're going to do due diligence. So you need to be working with a reputable contractor. They need to be licensed. They need to have insurance in place. They need to have qualification and of course, a written estimate for your ADU project. Just digging deeper on the disbursement process, we're not going to give you the lump sum when we become at funding day. We will do that in stages. So for example, you need money to pay for the permit. So you will send us a written that this is how much the permit's going to cost. It's going to cost you $10,000. You're going to sign a document that this is you're requesting for disbursement, and then we're going to issue a check. The next month, you said, okay, you're ready. You need to build foundation. How much is the estimate on the foundation? And then we will cut you the check. So that's how the disbursement process works. It's a construction disbursement for this product. Next slide, please.
And Audrey, I'm just going to quick time check one more minute and then we'll move on.
Yep, this is my last slide. So I want to give you a sample scenario. So pretend you are going to borrow $205,000 for your ADU. It's a 20-year term, right? On the right, on the yellow box, let's just say on year one, you borrow $100,000 for your construction. The interest only payment is $562.50 based on a prime rate of 6.75. Year two, you ask for another $100,000. Now you owe $200,000. So it's $1,125. And then in year three, you complete the construction, you're at $205. You see how much affordable the monthly payment is in an interest-only home equity line of credit? And then on year four, then you are fully amortizing payment, and that will be the $1,811. It is variable for the HELOC, and it will move depending on the prime rate. And that's it.
Thank you very much.
This is my contact information. Please feel free to call me, email me, or text me if you have any question. We would love to help you with your ADU journey.
And now we're going to move to a little bit of a different presentation about a very specific type of loan product that that can make sense for some of you. And David is going to talk about that. You're on mute, David.
Sorry about that. My name is David Butler. I'm a mortgage loan officer at Butler Home Loans. I have been in the mortgage industry for about 36 years now in the Bay Area. So I specialize in reverse mortgage. And so we're going to talk all about reverse and why that may pertain to you. Next slide. So I think reverse and ADU is a winning combination. Why? Because there's a study out of Berkeley that shows that 55 to 70% of homeowners that are applying for ADU permits are 55 years and older. And you just happen to have to be 55 years or older to be able to get a reverse mortgage. For those of you that aren't familiar with reverse mortgage, this isn't going to be, in a nutshell, what it is it is an opportunity for you to get cash out of your home. It needs to be owner occupied. You need to be over the age of 55. But when you get that money, no monthly payment is required on a reverse mortgage. Next slide. So why are seniors more likely to get an ADU? Why is it that so many seniors are looking at this? So first of all, seniors have owned their home longer. They're likely to have more equity. A lot of times when you finance the ADU that you want to build, you need to have equity in the home to be able to finance it. So that lends itself towards seniors being the ones doing it. The other thing is, and Anna did mention this on some of her slides earlier, they're looking for ways to increase cash flow. They're looking for ways to, get rental income or something like that. I know some seniors that what they'll do is they'll build an ADU and move into the ADU and rent out their main home. Now, I don't know where you live or what you do, but most of the homes in this area rent for $3, $4, $5, $6,000 a month. If you don't have any payments to make, that $3, $4, $5, $6,000 a month can be your cash flow. The next one is, she mentioned multi-generational housing. Just a quick comment about this one is there's different ways to look at this. I recently helped a client. He was 90 years old. I helped him get financing on his home. And what he was doing is he was using the money to build an ADU in his backyard, and his son and his son's wife were going to move into that ADU to be able to live there so that they could keep an eye on dad. Now, dad lived independently and lived by himself, and he was going to continue to do so. But now that they were close enough that if he really needed something and he needed it quickly, they could be there to help him. So that's an example of multi-generational housing. The other thing is I get a lot of, I'm with some ADU companies, so I get calls for people that are looking for financing. And oftentimes it's the children or the grandchildren that are looking to build an ADU into their parents' or grandparents' backyard. So they're calling about the financing, even though it's not going to be on their property. Well, if it's the parents' property, the parents are the ones that are going to have to get the financing because they own the property. They may not be able to qualify for a loan, a regular loan, to be able to get that financing. So a reverse mortgage can be an option. It's much easier to qualify for a loan that you don't have to make a payment on. So there's some different things in regards to multi-generational housing that make that work. So with reverse mortgage, there are different financing options. Okay. Again, there's levels of this, but the three main options are, the first one is what I call a one and done. So in other words, I'm going to get you a first mortgage. So if you already owe a first mortgage, we're going to pay that one off. And we're going to give you the extra cash if you've got enough equity in your home to be able to build the ADU on top. Now, again, if I get rid of your first mortgage, that first mortgage payment goes away and all the money we're going to give you for the ADU goes away. Okay. The second one I can do a reverse mortgage with a line of credit on it. Again, they want it to be a first mortgage. So if you owe an existing first, they're going to pay that off. But the existing money they're going to give you on a line of credit. It may be that I can give you as much or more than you need to build the ADU. You'd only pay, when it's a line of credit, you only pay on what you borrow and how much you borrow and at the time you borrow it. So it's kind of like a home equity line of credit, but it's a reverse mortgage instead, and it never goes away. You don't have 10 years and it's going to disappear or anything like that. So that could be an option that could work for you. Now, there's a lot of you out there that are like, I have a 2.5% or 3% first that I am never going to get rid of because I love that thing. And I can't blame you. I got a lot of those for my clients a few years back. However, there is now a reverse second mortgage that can go behind your first mortgage. Again, it puts you in a position where you don't have to worry about paying it. I have a client just recently that got a reverse second because she had a great first mortgage. She actually tried to get a home equity line of credit from a bank, and she couldn't qualify for it because she didn't have enough income. But again, because there's no payment on a reverse second, she could qualify for it. We could give her the money that she needed to build her ADU. She was going to build that ADU and then move into it and rent out her house. Now, if you have a grandson, a grandchild, or you're going to move and rent the house, just because there's no mortgage required on a reverse doesn't mean you can't make one. So in other words, if you had a first mortgage that you were perfectly happy with, you pay on it, you get a second to help your daughter, granddaughter, whoever build the reverse mortgage, because where are they going to find a house they can live in that they only had to pay $400,000 for? They pay a payment on that $400,000 second that you have gotten. so they can pay it down or pay it off, and you're benefiting them and they're benefiting you and improving the value of your property. So there are lots of different reasons to build an ADU, and there's lots of different reasons to consider a reverse mortgage if you're over 55. I know this was very high level and very quick, and we didn't answer a lot of questions, but if you are over 55, it's something you should at least look into. And if it not with me, with somebody else, this is my contact information. I want you to feel free to give me a call. But if you have a friend or a family member that does reverse mortgage, they can do the same things that I can do. Please feel free to contact them. But if you don't have somebody like that you feel like you can talk to, please feel free to talk to me. So reverse mortgage, again, it's just a consideration. There are so many stories that I could tell you, and I hope that something we've shared with you today is helpful. And I'm David Butler, Butler Home Loans. Thank you so much.
Thank you so much, David. We are going to switch to a slightly different topic, which is insurance, something we get so many questions about. So I'm really, really excited that Patrick Chua from Farmers has joined us today to talk through everything you need to know to insure your ADU.
Hello, everybody. Good morning. Patrick Chua here, your local farmers agent downtown San Mateo. So I'm going to fill in the insurance puzzle piece with this whole ADU conversation. So, it's been highlighted already. There's different kinds of ADUs out there. But one thing that is the same, regardless of what kind of ADU you get into, it affects your current homeowner's insurance. And really, when it comes to today's complicated insurance landscape, you want to ask your existing carrier how it would go if you were to build an ADU, because not every carrier can write property insurance in California currently. And so, you want to know ahead of time, like if you're going to have to shop around for a new insurance policy. So these are just some of the ADUs. I'm not going to go into those, but next slide, please. All right. So whenever you have an ADU, let's say, let's say it's a detached structure where you have it, separate from the main dwelling, then that's going to be covered in, a couple of different ways. One way is that if it's a really small ADU, maybe not here in the peninsula, because as you saw the prices from earlier, each homeowner policy has like 10% percentage used for any detached structures, and this is 10% from your main dwelling value, insurance replacement cost value. So let's say your dwelling replacement cost value is 500,000. Well, 10% of that is only 50,000. There's no way you can build an ADU with 50,000, right? So there's no way to cover that detached ADU, at least in the peninsula. Doing an endorsement for a separate structure where it's a specific line item just for the ADU. And just to kind of clarify, detached structure is basically other things on your lot besides the house itself that you're living in, the primary house. It's things like a storage shed or a guest house or a patio or a deck. These are things that are considered other structures. So you want to, you would need to add a separate line item to cover any kind of detached ADU, right? Next slide, please. So when you're building or considering building an ADU, there are a couple of phases that require, that have, distinct risks that provide you the opportunity to address those risks, right? And the first one is during construction, right? Because during the construction of the ADU, well, that's not covered in your standard homeowner's policy, right? It would be in your best interest if you got something called builder's risk, because you would want to insure that project, because again, since that's not covered by your standard homeowner's policy, your existing homeowner's policy, if something were to happen to that project, let's say it caught fire and you have to restart the project again, where you're going to get money from, right? You have to come up with that once more out of your own pocket, right? Whereas if you got a builder's risk policy, then you will be able to insure that project. And really, any responsible contractor should be recommending that to you, because he's also it's in his interest to also insure the project so he can complete it and get paid, right? So it works for the owner and the builder. to be interested in getting that builder's risk policy. And then after the completion, obviously, again, you have to now ensure that new structure, right? So whether that's expanding or adding to your dwelling amount, let's say you did like an attached ADU or maybe you converted a garage, like an attached garage, you would have to then, increase the square footage of your primary home, and then that would increase the total replacement value. Or if it's a detached structure, then you might have to get a separate policy for that detached structure. Again, every carrier is different. They underwrite ADUs differently. So some will require you to get a second separate policy for that other ADU, especially if it has its own official address. Next slide, please. And this is just, a little bit more about builder's risk, why you would want to get it, because again, it insures the project and the materials in case there's things like theft or vandalism, right? And really, if you have a construction loan, you're required to get builder's risk. So definitely something you would want to plan for. Next slide, please. And when you let's say use your ADU as a rental, well, then you have other things to consider, like your liability as a landlord, right? And definitely it's one that you want to consult your insurance advisor, because as a landlord, you want to have certain protections for yourself. The biggest one being personal injury. Personal injury is, the things that are not related to, it's the opposite of bodily injury or property damage to others. Personal injury means libel, slander, and more importantly, wrongful eviction. So any kind of rental property that you have, you want to make sure you have personal injury, because wrongful eviction is very widespread right now. There's a lot of disputes between tenant and landlord, and it can be costly to do that out of pocket. Next slide, please. And just to kind of show you guys what are some of the mistakes. I'm not going to read them out, but really you want to plan for your insurance when you're going into an ADU, because there's a lot of complicated underwriting going on right now because of the insurance landscape. And again, it really helps if you ask ahead to talk to your insurance advisor what it would take to insure an ADU. And certainly you want to treat insurance as part of the investment of building this ADU, because it really is supposed to be an investment so you can properly protect yourself. Next slide, please. And this is my contact. If you guys have any questions, anything property insurance related, I'm here to help. Thank you.
Thanks, Patrick. Before we move on to the next presentation, we do have a question I just want to interject here. For ADU insurance, if it's rental, what is the increased premium value for it being a rental? So I think there's an example. If the main house is 2,000 square feet, insurance is $1,000. Is it $2 per square foot? So how do people think about rentals?
In terms of the additional square footage?
I think that's the question.
Yeah, I mean, that's kind of hard to answer because each carrier, has different, rating. But basically in the peninsula, I usually use the cost factor $500 per square foot in calculating the total, replacement cost required. I mean, it's kind of hard to say. Yeah, I would just be like guessing if I were to put an amount.
Yeah, but that's a general number that to anchor to. We have some really good questions in the chat. Unfortunately, we are running low on time, and we have another presentation that I want to make sure that we get to. So I'm going to pass the mic over to Jenny Athena Wong, and then we will probably go 2 or 3 minutes over to get some of these questions answered if you all are available to stay on. And if not, like I said, we will be circulating a recording of this webinar as well. So Jenny, I'm going to pass it to you.
Hi, everyone. My name is Jenny Thina Wong. I am a CPA and a realtor. So what I add to my clients is values. In addition to finding the perfect property for you, I also help you make the best financial decision. My professional background and where I've lived in geography I worked at PwC, which is one of the big four accounting firms. I've worked with publicly traded and private REITs in the multi-billion dollar space, tech startup. I've worked personal investments. I worked with real estate clients in the residential and commercial space. I also speak Chinese, Mandarin, and Cantonese. That helps in the Bay Area. And in terms of understanding real estate investment perspective, I've lived in San Francisco 20 years, San Mateo County 15 years, and now I'm down in the South Bay for 5 years. So I've just aged myself there. Next slide, please. So whenever I counsel my clients on their real estate decisions, I always ask, what's your vision, right? What's your objective? And how I advise you on your strategy to think through depends on that strategy. And I'm really glad that I'm actually going last, and the insurance agents and financiers have already explained a variety of products and objectives you can use. For example, they mentioned wanting to build an ADU for retirement income, or you want to move into your ADU and rent out your primary home either in retirement, or you're younger and you just starting to earn more income to support your investment, or you build up enough equity in your property that you can pull out, cash out, and reinvest or build. And you build also increased revenue from rental income that helps you qualify to purchase your next properties. Also, if you're considering whether you're going to buy a property or sell a property, on the buy side, I help you recognize value of the land, the size, the house, the ADU, and the strategy to maximize that potential value depends on the more affordable market like Daly City or San Bruno or even San Mateo, which is a different strategy than the premium markets like Atherton and Los Altos. Same thing if you're planning to sell. How do we prep your property to get as highest value and best use? Next slide, please. Regards to building an ADU, I'm really, really glad that San Mateo County and across California is streamlining the process for permitting and reducing the costs, because in the past it's been just so costly and time consuming to get your permitting and get your construction done and inspections done that a lot of owners have chose not to permit not to record and not to permit their properties, which, it's cost benefit analysis, right? Some people don't want to do that because they don't want to increase the value of their home in terms of property tax. Want to let you know that if you're increasing a permitted ADU, your property tax will go up, but it will only be proportional to what the construction you add. Let's say you have a $2 million home and you bought it 20 years ago, your property tax is like $10,000 a year. Well, if you're putting $500,000 in to build a big ADU, that improvement in the land and the increase in your property tax is only based on that 500K. It's not going to reassess your whole property. Another thing is, the increase in value. If you permit or don't permit, your cost of labor and your cost of materials is the same, but the increase of your value with a permitted structure is actually recorded with the county, and appraisers and buyers and agents can account for that. If you build that 1,000 square foot property ADU and you decide not to permit it, you think you're saving a cost, but really the increase in value is really much smaller than if it was recorded. Not only is the value return lower, insurance companies would see it as a liability. Your potential buyers may see that as a liability rather than an asset. And you're always worried that maybe your property will be red tagged and you have to, go through an expensive process and pay fines. So cost benefit analysis. And the other great thing about building an ADU or making any improvements in your real estate, especially as you become a landlord, that ADU is now an income property. So when you have a business, you have income and you have expenses. And what's amazing with real estate investment is not only the return, right? 20% down, you get a $1 million property for 200K down, and the tax deductions. So there are many things that you can prorate, like your property taxes, your mortgage insurance, your insurance premiums, repairs, maintenance, travel, your professional services like your attorneys and CPAs and property managers. Those expenses can be prorated against your overall and apply to reduce your income. Next slide, please. As I talk about tax advantages, not only are they daily operating expenses, but depreciation is one of the best tax advantages, and it's considered a tax loss. So for residential property, it's usually depreciated over 27 and a half years. Let's say you have a $2 million property. Usually 20% is allocated to the value of the land, and 80% is the value of the property, the structure itself. And that structure itself is the 80% can be depreciated. So every 20, you divide in a $2 million home, 1,600,000 divided over 27 and a half years is roughly around 58K of depreciation. Well, there's also that you take to offset your rental income each year. There's also really great in the current federal administration where you can have bonus depreciation, where you can take the 27 and a half years, $1.6 million, and the depreciation expense on that in year one, not the whole $1.6 million, but you do a cost segregation study, which takes an engineer and goes into your property and it identifies long-term assets from 5 to 15 years, like your roof or your decking or your cabinetry and things like that. So usually in a property, you can allocate about 30 to 40%. So let's say we have that, $1.6 million asset again, that the engineers in the cost segregation study identifies 560K of long-term assets. And that's the cost that you would normally do. You can do bonus depreciation, where you take all of that 560K now in year one to offset your passive income, your rental income. And that tax advantage rolls over. So if you don't use all 560K of income in year one, it rolls over year two, year three, and it continues to do so until you reduce it all the way. Next slide, please. Value of your ADU, like I said, to appraisers, it's different ways. In valuing what your ADU is going to add, it's different from a market. In Daly City and San Mateo, we're modest. People are looking to maximize their revenue by adding ADUs for rental income. Whereas when you're in the premium market like Hillsborough or Atherton, they value privacy and space. And building an ADU is more so for personal, for friends' use or a nanny or something, or a guest house or something like that. So the value that they attribute to the ADU is not so much on income, but more so enjoyment. Next slide, please, or that's it. And also there's AB 1033, which allows for the conversion of an ADU to a condo that you can sell separately. So I think this is my time. One disclaimer is I'm a CPA, but I'm not your CPA, so this is not tax advice or legal advice or financial advice. If you want to talk more about strategy of, your real estate investment, happy to work with your professionals in collaboration to help you make the best decisions.
Thanks so much, Jenny. Yeah, AB 1033, just a note on that, is a very exciting law, allows homeowners to build an ADU and sell it separately as a separate condo unit. Unfortunately, it's an opt-in law, so your municipality has to actually have passed an ordinance allowing this to happen. There are a few jurisdictions across the state that have already done this. San Jose was the first. And so it's something you should look into. If it's something that is of interest to you, but it's not allowed in your jurisdiction, do reach out to your local elected officials and let them know that this is something that your city should opt into, because it could be a great source of wealth for homeowners and bring new homeownership units onto the market. And with that plug for AB 1033, I want to thank everyone. I know we're a little bit over. Apologies about that. We had a few really good questions in the chat, so that I know Anna Lopez wanted to answer, and one of them actually has to do with appraisals. So it's a good segue from what Jenny just covered regarding valuation of ADUs. So we're going to do, Anna, could you just do 2 minutes to answer the questions around appraisals that we have in the chat, and then some new federal legislation that may change the rules around financing, and then we'll round out.
Yeah, thank you, Anna. So, in regards to the first question was in about the new Fannie Mae policy on regards to appraisal and can you get a loan without triggering a new loan, an existing? So, technically, what that is Fannie Mae policy came out in March of 2026, and the policy takeaway is it's mainly for appraisal and value of ADUs. So Fannie Mae now permits up to 3 ADUs on a single property, and it's really subject to local and zoning eligibility and requirements. ADU rental income can qualify now. Borrowers may use eligible ADU rental income to help qualify for a purchase or a limited cash out refinance. ADUs can increase your appraisal value, meaning now the appraiser just not only analyze your primary, they don't add the existing living square footage as a whole. They do a separate ADU appraisal and give that value as well as a full value of your property. So regards to loan, this is so new that not that I know of, there's any loans right now for your existing mortgage. So you can always call your existing mortgage and say, hey, with this new policy for Fannie, am I able to do a modification of my loan? Most modification loans are based on interest and terms. They don't base on additional money for you to build your ADU. Not yet. So because this is so new, I don't think they're going to have anything yet for you to blend on with additional value. What this will help is when you're buying a new property or when you're doing a HELOC or an ADU loan or a HE loan, it's going to be able to add in the rental income, future rental income, like Elja had said, and you can utilize for your loan. I hope that answers your question. On regards to appraisal itself, there really isn't a source to say what is the percentage that you can utilize if you build
Let
a
me
whole.
just read the question because I don't think the
Sure.
audience can. The question was around if there is information about the value that an ADU adds to your home. There are numbers that have been floated, like 20 to 30% of added value to your home with an ADU.
Yes.
Yeah.
So that there isn't anything verified because with appraisals, it's not public knowledge, right? What you can get from it is, for example, San Jose City adapted the AB 1033. They were able to sell an ADU, subdivided lot and so on for 1.5 million. There was two that was sold, and we know that the approximate value of the ADU was about 585,000. So that's a huge number, but again, we don't know exactly what or have documents to say this is how much the ADU was built for and this is how much it was sold for or appraised for. But I'll give you a pure example. With Mary West, we had an ADU loan for an investment property. The client bought the investment property at 1.1 in September of 2025. He asked for an ADU loan for 365,000 in, I believe, December, because he wanted to build the ADU. We had to utilize as complete value, meaning, how much that value would be for us to lend on it, and then as well as the rental income to qualify. When the appraisal came back, it came back at $1.5 million for adding that ADU as a complete, but that meant that he had to give our appraiser the blueprint of his plans, and the appraiser was able to add that. Now, normally it's not dollar per dollar, guys. It's usually 20-30% is on the range, but ADUs are very new to appraisers right now, and it's up and coming. So we're going to see a lot of different changes, but there's no verified information. That's all I have.
Thank you so much. And thank you everyone who stuck around until the end. Feel free to reach out, particularly if you're in San Mateo County. And thank you so much to all of the presenters. Really appreciate your time this Saturday morning.